announcement. It is this is an important live. This is not one of my silly lives that I do all the time. I really want to share some information with you guys. So those of you that are business owners with employees, you have a workers' compensation policy. This is important information that you need to know. So the WCIRB, which stands for the Workers' Compensation Insurance Rating Bureau, they approved amending a COVID-19 surcharge. I got this notice just a few minutes ago, and I think it's really, really important to share with those of you who have a workers' compensation policy. So I'm just going to kind of go over what was sent to me this morning about this surcharge. So the Workers' Compensation Insurance Rating Bureau, their governing committee, just approved amending the January 2021 pure premium rate filing. So it is recommending that the application of the 6-tier surcharge for COVID-19 cost to next year's advisory rates. So the surcharge is going to range from 1 cent to 24 cents, depending on the industry's relative share of the COVID-19 claims filed to date. So, when COVID hit, everybody was looking towards their insurance policy for loss of business income, and that coverage was never intended for COVID, and there was no coverage. But on the workers' compensation side, COVID-19, there is coverage for those kinds of claims because it does cover communicable diseases and infectious diseases and whatnot. So there are COVID-19 claims on the workers' compensation side. So I'm going to post in the comments. They also sent me a chart. So I'm gonna post that in the comments below. But anyway, so what they sent me says that overall the surcharge adds 4.1% to a rate indication, which would be another rate cut for the system if not for the COVID-19 add-on. So the Bureau is a private organization. It has kind of a sort of a government responsibility because they are the Insurance Rating Bureau's governing committee. So anyhow, it is the WCIRB is financially supported by insurance carriers. So just kind of put that out there. The committee did reject a motion by the State Compensation Insurance Fund. So that's when we talk about state fund, that's what we're talking about, the State Compensation Insurance Fund. The president of State Fund made a motion and it was rejected. The motion was to eliminate the surcharge entirely and allows carriers to handle the COVID-19 issues with a scheduled rating. That got shot down. So his motion did not go through. He was proposing that the load punishes the sector hardest hit by the economic fallout from the pandemic, the small employers. I kind of think he was right. I mean, the employers are really going to be the ones that are hardest hit from the economic fallout. And so because it's not just going to be on the workers' compensation side for small employers. So State Fund was actually kind of going to bat for the small employers. The motion failed because no one seconded it. So no one got behind the State Fund president, or no one got behind him. No one seconded his motion. So instead, the committee approved with a 10-to-1 vote to amend the filing to apply the surcharges: 1 cent, 3 cents, 6 cents, 12 cents, 18 cents, and 24 cents. The surcharge amounts to roughly, this is where it gets important for those of you that are watching that have employees and have a workers' compensation policy. This surcharge amounts to roughly a 30% increase. So just know that come January 2021, if you're looking for a workers' compensation policy, there is going to be that surcharge for COVID-19 claims in California. It's not going to be pretty. So anyway, I just wanted to bring that to light and share that with you, that this happened because this surcharge is going to hit every California employer, regardless of whether or not they actually had a claim regardless of whether or not their industry was in it. I mean, you look at salons. I talked about salons this morning. There are salons that do have employees and have workers' compensation, but look at how many salons have not been able to operate and have taken a hit. Restaurants have been hit very, very, very hard. But then there's a lot of these industries where they were hit by this COVID-19 so very hard, and yet their industry is an industry in which there's not really been any COVID-19 claims. They're going to be affected as well. So anyway, so I didn't want to be on here too long for this. I just wanted to share this information that you are going to see in California a COVID-19 surcharge starting in January 2021, and it is going to roughly be about a 30% increase in premiums. So there you have it. Something you can plan for in your business financially coming for the next year when it comes to workers' compensation. And I want to let you know that if you have not considered a pay-as-you-go workers' compensation plan, you really should, because pay-as-you-go is a program where you are paying your premiums based exactly on your payroll. It's not an estimated number. You're paying specifically, this is how much my payroll was this week or this last 2 weeks, however often you do your payroll. This is how much payroll I did. So this is how much my premium is. It automatically knows. It almost self-adjusts. It lets you kind of plan. Like maybe you have a certain season where your employees work more hours, or maybe you even bring on employees during a certain time period to handle the workload. So your payroll's higher. So you can kind of plan for that with a pay-as-you-go workers' compensation plan. If maybe you have a time of year where you work less, so you have less employees and your payroll is less. Well, why pay more when your payroll is less, when it can self-adjust throughout the year? Traditional old school style workers' compensation, you give this guesstimated number. This is how much based on last year's payroll we think we're going to pay this year. And then you go through the year and life hits like COVID. You're going to get to the end of the year and have the audit. And normally what we see happens when that audit happens, you owe a big fat check, and that big fat check hurts. Well, with pay-as-you-go, when you get to that audit, if you have reported every dime of the payroll, including bonuses, including tips, if you've done that, when you get to that audit, you shouldn't owe it. Maybe unless you've had a change in class code, or there are some things that can cause you to still owe at the end of an audit with a pay-as-you-go program. But generally speaking, for most businesses, on that pay-as-you-go, when you get to that audit, should be a wash. Anyway, so that's my information about workers' compensation today and what's going on with COVID-19 and some surcharges and the WCIRB. So anyway, if you've got questions about workers' compensation, you want to know about that pay-as-you-go program, please let me know. Give me a shout. You can send me an email. You can give me a phone call. Here on my Facebook page, you can actually book an appointment with me without ever picking up the phone and calling me. You can come into my private messages and send me a message that way. But anyway, so like I said, if you have any questions, let me know. But I'll see you guys later. Today's